how badly does this SEC investigation impact your outlook for Tesla?
Sure. Thanks for having me. The reality is it doesn't really affect our opinion very much of the stock. As was just referenced, the solar part of the business is only about 6% of Tesla's overall revenue. So I think most analysts view it as kind of a non-core business. It's really the automobile business is the primary driver of the top line and bottom line. And that's going to be the case for some time going forward. So, but Tesla, if they were to disclose every risk related to the company, their 10K filings would probably be 1,000 pages. So I think they're going to argue that, this risk was covered in some of the risks that they have already put out there in their filings. So, we don't really see it having a major impact, but, it is, one of many risks. Of course, anything related to Tesla, whether it's a vehicle recall or a whistleblower complaint, really makes headlines. So I think that's what we're seeing.
Garrett, I think back to 2019, you'll remember that Walmart sued Tesla because of some defects with solar roofs they'd installed for them. Amazon also had similar complaints. So we know about some of the issues there. We also know that, it's been slower to market. But this is a stock that's been under pressure, right, since that November 4th peak. Was this just a knee-jerk reaction in the early part of Monday's session, or are there some big questions to ask here around the long-term trajectory for Tesla?
Sure. So, yeah, the stock's almost 20% off its high, from just over a month ago. It was a difficult day. It's been a difficult few weeks for the electric vehicle space. Of course, you had the Lucid news today. Rivian has sold off sharply in the last couple of weeks. So, I think you're seeing a group of stocks that had run up significantly. A lot of investors were starting to ask questions about valuation, which is our primary hang-up with Tesla right now. We have a hold on the stock, and it's primarily due to valuation, but also competition. And so I think you've seen some profit taking in Tesla and other names in this space over the last few weeks.
Garrett, how much do you think the sell-off has to do with Musk selling his own shares? And does that concern you?
Sure, that's another contributing factor. Obviously, Elon Musk has sold a lot of stock over the last month or so. So, it doesn't look, the optics aren't good. If you're considering buying stock and the number one shareholder and, the individual who owns almost 20% of the company is selling, it's not a good time. The optics are not good. So yeah, I think that's another contributing factor to the sell-off here in recent weeks.
Garrett, let's talk about Lucid. This is an SEC under Gary Gensler that has not been hesitant to look into some SPAC mergers. Of course, all these SPACs have different stories. You're not so worried, though, are you, about this disclosure?
We're not. And what we're seeing in the space is a lot more regulatory scrutiny. And it really goes back to another company that we follow, Nikola, and their founder and former CEO, was charged with 3 counts of fraud. He's currently pending trial, which will happen next spring. But there's some pretty serious federal charges against him. And so part of it is a lot of these companies have gone public through SPAC, which is a reverse merger, which entails less disclosure to investors, when a company goes that route. So I think the SEC is going back and looking at, really looking at some of the disclosure that was made. It's not a concern with us for Lucid because we know they have a brand new factory in Arizona. They have a terrific product in terms of the Lucid Air, which the specs of that product, in our view, stack up to any electric vehicle available today. When you look at 1,100 plus horsepower and 520 miles of single charge range. Of course, it was just named the Motor Trend Car of the Year for 2022. So we view this pullback and the subpoena that they received from the SEC as really a buying opportunity. We're confident in their disclosures that they made in their documents leading up to their July SPAC transaction, and the assumptions and forecasts that they had in there for the next 5 years seemed very reasonable to us. So we think, we're telling investors, we're telling clients that it's a buying opportunity.
Back to Tesla, Garrett. How do you make your assessments of the company when the company itself doesn't communicate very much? Mostly, we're just reading Elon Musk's tweets.
The valuation is really hard to justify. So that's the biggest issue from our standpoint is we have to base our price targets on a 12-month time horizon. And so we think most investors are taking a 5 to 10-year view of the company. Tesla, of course, wants to grow their annual volumes by a factor of 40 over the next decade. So going from about a 500,000 vehicles sold last year to about 20 million in the year 2030. And so that's why the stock trades at such lofty multiples is because investors are willing to pay, these sorts of triple-digit multiples on a PE basis for that growth in the coming years. So, but it's really hard. Tesla is really in a class of its own. You have traditional automakers who tend to trade at single-digit PE multiples, mid to high single digits. If you look at a Ford or a General Motors, and then you have a company like Tesla, trading at north of 100 times next year's earnings estimates.